This podcast is brought to you by the award-winning prop firm, Crest.
Hello everybody, welcome back to another ArielFx Smart Money Concepts video. It's Nathan here from ArielFx, and I have a really good one for you guys today, all about how to properly backtest and keeping smart money very simple. Doesn't need to be difficult. If we just follow a couple of rules and follow our good procedures and trading plan, we are going to be successful. And I'm going to show you exactly what we need to be looking for on a day-to-day basis and how to backtest. Backtesting is so important to learning, and so is journaling. So we're going to be going through exactly how I go about backtesting, how smart money concepts can be so easy if we just do the little things right. Trading does not have to be difficult. It's really just repetitive, very consistent. And once we get the concepts down, it is just very consistent and repetitive. And all we have to do is continue to follow our rules every time, and we will be overall profitable in the long term. So guys, I'm going to first go over the CAD Swiss franc opportunity that I discussed last week. And then I'm going to give a couple more trade ideas. I do have a lot, but I'm going to narrow it down to just my top 3 for the week ahead. And then we'll get right into the video. So with CAD Swiss franc from last week, I did say that we were looking to buy in and around the 7283 level. We can see this because we are currently making higher highs and higher lows in the market, and we wanted to continue into our higher time frame supply zone at 0.74. We had equal lows on a lower time frame. We swept those equal lows, coming into a level of demand and that swing point, filling up all of this imbalance because we know this is just straight buying volume. There were no sells offered within this region of price. So we filled that imbalance. We had that sell to buy on a lower time frame. We consolidated, created that doji candle on the 4 hour, and made a break of structure back to the upside. So I wanted price to come back down into this overall level of demand, have a reaction, and potentially carry up long. However, price had already reached our objective point. So what do we teach? After price has reached our objective point, we no longer look for buy opportunities. However, it wouldn't be a bad idea to hedge our positions. So I did take a very small position on half risk here today. We are in a little bit of drawdown, and if it just continues to the downside, which we could easily be expecting, I would then turn around and look to sell my position at 7315 and 73636. Now I'm going to go into the reasons why these supply levels. However, I want to touch base upon 0.74. We know this is the higher time frame distribution schematic that we created following that lower low. So keeping with structure, we created a lower low, a lower high, and a lower low. So what do we naturally expect? A lower high for a lower low. That's exactly correct. So if we zoom out to the higher time frame, because multi-time frame analysis is so important, we have this retail trend line, 1, 2, 3, and 4 touches. So we know there's sell side liquidity resting below this low. So we know within the current trend, we're making lower lows and lower highs. We're looking to then pull back and then attack that sell side liquidity resting around 0.71. That's a psychological level. So if we zoom back into this, we can see 0.74, another psychological level, was this overall level of supply. It's really just the pullback into premium price and looking for shorts now. However, there is a lower time frame level of supply that if we decide to come higher, then price could look to come into. See, this is really that last huge buying volume before the break of structure occurred. However, if you want to go based off of a lower time frame trend, this was that failure to generate a higher high in this bullish sequence, and we failed and started to make that lower low. So that will turn into supply on a lower time frame. That lines up very nicely with 0.7450. So I am targeting that on half risk right here at 7283. Stops will be below that overall low because this is the low that created this high. And since this is the low that generated the sell to buy, the sponsored move, we could come a little bit below this demand zone and maybe mitigate something on a lower time frame within that wick. All right, so I'm still holding this position, but we could easily break. And we can see on this current trend, we've made a high, a low, a high, a low, we have failed to generate a higher high, and now we have created that lower low. So that is why I'm only on half risk on this position, and I'm also looking to pull back into this supply zone in order to sell. So 7315 is my first level, but as we know, since we have broken structure lower time frame, this will be the new range. If we start to pull back, we could have a pullback into premium price, which would be that lower time frame level of supply, and then we could short from that level as well, 73636. The reason why this is supply here is because within this counter trend, we've created a high, a low, a high, a low, a high, a low. We have failed to generate a higher high, and we have made that lower low. So that is that lower time frame level of supply that we're looking to play off of as well. Stops would go above this level here, and then if we enter here, stops would go above the overall swing high. All right, but we are still hedging our positions by taking longs in this level. So that is what I'm looking for the week. I also have AUD CAD and AUD Chef sells for the week, and I will go over what I'm looking for very quickly. If you recall, if you are in VIP, we had a sell order from 87835 a couple of weeks ago. Coming into our level of supply, we can see that we are higher time frame bearish. We want to continue with our overall direction. This is the high that produced this overall lower low, so stops have to go above that high. We can see that we came back up, and then we had a reaction to the downside. We swept lower time frame liquidity, this descending liquidity with this sponsored move. Big buy to sell created that lower low, mitigated a lower time frame level of supply in here. We pulled back, we entered another sell position in this level. Stops are above this high, and now we can see we are breaking structure to the downside. So we are in profit on this trade, we are in profit on this trade, and looking to add to our position here. If I scale in, what you'll notice is that when we came up into this level, we started to distribute. We started creating discrete higher highs and higher lows. And then in here, we have failed to generate a higher high, and we have created that lower low break of structure. So now I'm looking to add to my position on the lower time frame. We have swept liquidity, equal highs, big, huge buy to sell. This happened at 9 a.m. EST on Tuesday, November 8th. So this was prime New York session open for me. We fell to the downside, pulled back into a tiny level of supply, and then that's where we rolled over and made that lower low. So this morning, I called this out on my live session, 8/7/20. We just failed to come into that, but I'm still holding this sell limit. Stops would be above the overall high because this is the high that generated the lower low. This is where we broke structure. So this is one singular push on the quote unquote higher time frame. So you could be a little risky and place your stop above the swing high, but technically, since this is the range here, we could pull back 99% of the way, make a lower low, and still maintain our bearish structure, which is why stops would have to go above that high. So if you are scared about placing stops that large, well, simply put, we just have to look for risk to reward. And if we understand higher time frame risk to reward when it comes down to larger time frame entries, we would look to target 8.4. We wouldn't expect to come higher because there's nothing else to mitigate within this entire range of this trend. You can see that this is just a pullback that we're currently in. There's nothing else to come into. So we wouldn't expect a higher high to form, which is why we are looking for higher time frame lower lows. So overall, we're looking for 0.84, and that would provide us, even with this large stop loss, would provide us with, in this case, a 1 to 5.7, our original entry that we're in profit in, a 1.1 to 1.5, and then our original one that we're currently in, a 1 to 4. So definitely looking really good. I also hedged my position since we accumulated, and across the board, we are seeing some higher time frame shifts in structure, just deeper retracements on the higher time frame. And the fact that NZD CAD is clearly bullish, as we can see, we have broken the structure counter trend. We were making lower lows and lower highs, and then we finally broke structure. I do expect NZD CAD to continue long. So with that being said, I did place a buy order on AUD CAD because I thought it could gain some strength as well into this level of supply. We can see we accumulated in price. We have broken counter trend structure. We pulled back. We failed to generate a lower low in the market, pushed up, reacted off supply, but failed to generate a lower low, and then made that higher high. So that really shift in structure created that level of demand for me, and now we are starting to push back to the upside. So I'm in a little bit of profit here on this buy. So I want to be very careful with this because this is another level of demand that we have come into, but I do expect to roll over. I have to trust the structure. So that's what I'm looking for. Just looking for continuations. If we get a break of structure to the upside, well, then we have to just look at the higher time frame and understand that we will just be shifting structure higher time frame. But like I say to everybody, we have to just continue to trade with the trend until it breaks. If you guys have been in my VIP community, you would know we have been selling AUD CAD all the way up since, I believe, man, I don't even remember where it was. I think we had so many positions right in here, I believe that's where it was. No, that's April. right in here, right? This is where it was. This was our prior swing point, lower low, pulled back into this level of supply, distributed lower time frame, came back up into this level of supply right there, and had multiple positions going all the way down. So that's when we are trading with the trend. It makes it very easy. But if we do get a break, we can't really anticipate that. And that's just something we have to just take on the chin, move along, and adapt to the market. So I'm still looking to short off. However, I am in hedging positions long for that reason. All right, so that is my area of interest. I have my sell limit placed at 8,720. The last one I'm going to go over with you all today is very similar. It's AUD Swiss franc. So we did come back up into a level of sponsorship and supply. If we can just see higher time frame, we have created a, oops, just go back here. We have created a lower low, pulled back, lower high into a lower time frame level of supply, and I'll just show you what that looks like really fast on the 1 hour time frame. Just delete this. And we can see that lower time frame level of supply there, that doji candle, right? Then we created a huge imbalance, an immediate push down. We created descending liquidity. We ran the liquidity with the news. News was just used as the excuse to inject the volatility to mitigate this order, which is why news does not matter. It will always go with the technicals anyways. We then end up continuing back to the downside as expected, creating another lower low. Push all the way back up, swept buy side liquidity all in here, and then came into a lower time frame level of supply into premium price, because we can just pull our fib and understand everywhere above the 50% is premium level, and that's where we want to be looking to sell. So we had an opportunity from that level of supply. Price ran this lower time frame high and then fell to the downside and ultimately created another lower low. So if we head to the 2 hour time frame and just continue with the structure and the mitigation train, we can see this 2 hour time frame is clearly the buy to sell. Now many people are like, well, so do you trade the 2 hour time frame? What time frame do you trade? Guys, I trade every single time frame. I'm just looking at the overall structure of the market and then scaling in and out to see what price is doing. See, the higher time frames are just zoomed out versions of the lower time frame, and the lower time frame is just a zoomed in version of the higher time frame. Price is fractal, and the market is going to be delivering price on every single time frame. It's just one big picture, and the time frames are just different points of view for that one picture. So that's why trading one time frame doesn't work, because you need that holistic perspective. So in this case, my trade happened to be on the 2 hour time frame. Doesn't mean I trade the 2 hour. It just so happened that the prettiest looking picture and the concepts that I teach happen to form and look the best on the 2 hour time frame here. So we entered at 64158, had an initial reaction, came back up, continued to create higher highs and higher lows, and this is where we're starting to distribute. We can see discrete higher highs and higher lows. That is why it's not very good to, right when we have a reaction from this level, scale down to the 1 minute and look to take a trade, because guess what? We ran right back up. 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 Still maintaining our structure. This is the high that created this low. So we're still maintaining that structure. So even with this just distribution, we're still maintaining our structure. We're looking to make a lower low now. So that's why we can't just zoom into the 1 minute or the 5 minute after having an initial reaction. Scaling in does take practice, and it does have some sort of strategic property to it. So if you guys haven't checked out the prior video that we posted last week on the Trading Nut channel, all about scaling in and trade management, highly recommend that. That's a very good video. So we can see the distribution, and once we understand that we are possibly distributing in a higher time level of price here, we can go to the indicator section and type in VFI. Now this is the only indicator that I use besides the 50 EMA, because indicators don't really matter, but I like to see volume on occasion and divergence, and we can see that volume is diminishing and price is still climbing, which tells me that the banks are offloading their positions at this level. They're trying to turn around out of their buys and into their sells, which tells me that they have to have someone on the other side of the market to buy price from them. If they're selling, they need someone to sell to. For every buyer, there's a seller. So when they're offloading their positions to buyers, since they're selling, they have to sell to a buyer. That's why price continues to push higher. However, the volume, because they're getting out of their sells, starts to diminish, which is why we see that divergence. That is a big clue of institutional distribution, institutional offloading of positions, and a possible reversal. Doesn't mean it's going to be a reversal. It's just a good indication of it. It's a good confluence to have. So that all has to do with Wyckoff, and I enjoy trading Wyckoff when it is present, but it's not a 100% needed confluence in my trading. So I've seen it here, and what we can look for is this is the overall structure. We've created a high, we've pushed down, created a low, failed to generate a higher high, and created a lower low breaking structure. So now we know this is the failure to generate the higher high, lower low. So overall, this is the supply zone that flipped from demand, which was right in here, these orders, that order block, demand. If this was validated, we would have made a higher high, but instead we stopped and made a lower low, so that will flip to supply. So that's why I have my first position just at 638.150, but also if we scale into a lower time frame, we can notice within this pullback that failed to generate a higher high, we can see the counter trend. We can see a high, a low, a high, a low, a high, a low, a failure to generate a higher high here, and then another lower low, right? So this is just a zoomed in version of exactly what's going on within this supply. So we understand that this is higher time frame supply, so that's where our first entry is. This is our lower time frame supply, and we have imbalance in here as well. Just straight selling volume, and we never had any buying that was offered in that region of price. So 63927 would be my secondary level, and that's where I'm going to be looking to take my position short. Obviously, this is all for educational purposes only. You take full responsibility of winning or losing these trades, but these are the trades that I'm looking to get into. So if you're wanting to take advantage of them as well, understanding that I still do lose trades too. I'm not 100%, but we have good probability of making money off of this because of all the confluences. So trade at your discretion. So now, guys, I'm going to get into some back testing. I'm going to go over two pairs. The first one I'm going to go over has already been pre-planned. So the goal of the first one that I'm going to go over is to show you how to properly backtest and to go over the step-by-step approach as to how we can really simplify smart money, go over exactly what we need to look for, and then take trades based upon backtesting. And then all it comes down to is simply just applying what we've learned to the live markets, because backtesting is price, right? It's still price. And now we just need to transition that into live trading. I will have you know that backtesting will seem to be a little easy just because there's no emotion involved in it, and you can speedily go through price very quickly. Obviously, I could probably backtest from here to here within a matter of about a minute, but from here to here is almost 1 month. So we have to go through the psychology of going through trading within this 1 month, which could impact decisions, but while we're backtesting, it may not. So just that disclaimer, because I know a lot of you out there probably find backtesting to be relatively easy. However, if we can make it easy, if we can master our psychology, which is why for VIP community I've created that psychology course for free for you guys, I think that will really help you, because you'll be able to master your emotions and be able to tackle the market just like you're backtesting, which becomes so much easier. So many people are like, oh, trading is so difficult. I continue to lose. If it's so easy, then why can't I do it right now? Guys, we have to understand that trading is a process, and you all know this. And I'm not going to rant for too much longer, I promise. I'll get into the video. But I want to really, harp on the fact that we have to be able to let time take its course. You can't speed up experience, right? I always give the example of playing the guitar or riding a bike, right? Someone who could be the best teacher, a professional bicyclist or whatever the term is for, or a professional guitarist, you have the best mentor, teach you all the chords, teach you all the strings for bike, teach you exactly how everything works and tell you what you need to do to ride it. But for everything in life, guys, no matter what kind of mentor you have, you first and foremost, you need to find a mentor that can give you the right information first and guide you along the right path. That's a number one certainty. But two, what we have to understand as traders is that no matter how good our mentor is, the only way we're going to become better is if we just practice. You find a mentor that gives you the right information and is willing to work with you one-on-one and help you develop the skills and guide you the right way. That's a must. But then at the end of the day, it just comes down to your experience and time that you put into it. So if you are struggling with your trading, I recommend you just think about what I said about just experience. It just takes time, but it comes down to practice and hard work and determination every single time. We just have to keep sticking with it. The law of nature really says if you do not quit, you're going to find a solution. You're going to find a way to get there. All right, so we're going to go through sort of a step-by-step here on NZD USD that I've already picked out. I believe it is over, where is it? I'm going to go to the 4-hour time frame. And it's back in July of 2020. So it's all the way back here. I'm going to put my cursor July 22nd. Where is July 22nd? All right, let me go bar replay here. July 22nd is right there. Okay, cool. So I'm going to put it right here. Now, all of this, the first one on NZD USD, everything has sort of been pre-planned. I've already looked through NZD USD, trying to find a right example to show you how backtesting is supposed to work. Yes, all the trades that you see have already been pre-planned by me. So I'm not saying that, what I'm doing here is through my skill. I'm just trying to show you a good example of how to properly backtest, and what you need to be looking for in terms of confluences and stuff. Then my last example will be a random pair. I'm just going to come up with it on the spot, and I'm going to go to a random time frame and a random price, and we're going to apply what we've used on NZD USD to another pair. But I'm not going to have any clue what pair that is, what time frame that is, or what date. I'm literally just going to pick a pair, pick a time frame, and pick a date, and we're going to go with it and see what happens. Because I first want to introduce you to the right concepts and the ability to understand how to properly backtest, but then we're going to do it live with another pair. So you can see how I go about doing it if I have no understanding of where price is actually going or whatever. I'm just going to pick a random date, and we're going to go with it, and we're going to mark off charts and take trades as we go and just see how we do. Okay, so my attempt here is to really try to prove to you guys how easy trading can be if we have the right psychology, if we follow our risk management, if we follow our trading plan, and just understand the basic concepts. It really doesn't need to be that difficult. The people who complicate it are the ones who are probably losing. It really can be quite simple. So let's first start off by talking about NZD USD here. It is July 22nd, 2020. So what do we first need to do? Well, we need to go out to the higher time frame and understand where we're headed. So we need to do our top-down analysis. So in order to go about trading this, let's first figure out where we're headed. So currently we are still in a higher time frame bearish downtrend, but I did notice on the higher time frame, if we scale out to the weekly, and guys, when you're backtesting, just act like you're normally trading. Do your top-down analysis, follow price, scale in, understand time and price, market structure, supply and demand, and just go based upon your overall ability to trade and the concepts that and act like it's real price. So we can see we have created a higher high, a higher low, a higher high, and now we're creating a higher low. So we are currently on the higher time frame in a bullish market, and I can see here that we have relatively equal highs right there that we could go look to attack. Okay, so those equal highs around 0.9. So that's something that we could come into if I just knew that if price was just in this region. What I can also see is these equal lows were swept very strongly. Clear sell to buy, and we came into a accumulation schematic on the lower time frame. So this is an accumulation on the lower time frame. I'll go down to the daily just to show you. And we can see that we have actually come into our level of demand. So lower low, lower high, low, high, low, high, low. This is our last selling volume before the expansion occurred. We can see all of this imbalance in here. And then we can see the break of structure, and then we started with the higher high again. And this accumulation actually came into this level of demand as well. Why is this demand? Because on this time frame, we've created a high, we have failed to create a lower low, and then we have made a higher high. We pulled back to mitigate that, and that's where we started this expansionary phase. So everything has a purpose, and we swept liquidity there as well. So what I noticed is that between the start of this wick where we started the higher time frame downtrend, the last down move before the higher time frame uptrend, we didn't quite come into that wick. So that kind of created a little bit of an imbalance within this region of price. So even though there's imbalance all in here, there's no telling if we're going to come all the way back down into that region, right, to fill the imbalance. So I just wanted to tap into that demand level. So anywhere between 0.5450 and 5.5. So now that we understand the higher time frame and where we're looking to potentially go, where is our bias? Well, yeah, we're still in a downtrend here. we're still making lower lows, lower highs. However, we swept equal lows very strongly. This was the 2020 crash, guys. Very strongly, and we mitigated that level to the exact T and had a reaction. Now we're starting to make higher highs and higher lows. So what I would probably expect, especially because now current price is pretty much right back up here, we're probably going to sweep buy side liquidity above this high. Okay, so let's just scale back out and look at where can we potentially look to target higher time frames, right? Because we need an objective. We need an objective. Where is price headed? So let's look at the structure. Well, this is the high that created the overall lower low. This is just one push. So if we are looking to even break structure or just pull back and go short, where could the higher time frame objective be? And I would probably say that would be in and around this level, because this is the supply that mitigated this supply, and then we have just straight imbalance here. We never mitigated that supply there. So I'm going to call this, let's just say right there, 7,150. That's a clear psychological level. And it actually really is a psych level here on NZD USD. So that would be our overall take profit. Now let's start to scale in and let's look for potential trades. So we know that the current trend is bullish, right? High, low, high. So let's look at what we have going on in here. So this is one expansionary move, pullback, expansionary move. So if we pull back, where could we come into? Well, we have relatively equal lows here. I would think that this would be a level of demand right there because we had this. You can see from that wick right there, that was the last buying volume before the sell-off. We came back up into it, failed to make a lower low, higher high. So that would turn into demand right there. So that's what I would look at. So I'll extend that over. And then, yeah, that would probably be it because this low mitigated this last sell to buy. So that would be good. However, I can see that this is not really a pullback, but it is a level of consolidation. It's a level of accumulation, lower time frame. So this could be another level of interest for me here. So I'll go let's go 6.5, 850, just to make it pretty. And then we'll play price out. All right, so we just got to wait for price to do its thing. And right there. Okay, so we have our initial reaction. What I'm going to do here is, for the sake of time, I'm not going to go into all of the trade management techniques and scaling into everything. I'm going to try to keep it on the 1 and 4 hour time frame, just because if I were to really scale in and go through my normal routine of going through all the time frames and doing proper analysis, it would take hours and hours and hours, and I don't want to waste you guys' time with doing hours and hours of this type of content, which is still very good value, but I'm sure you don't want to be sitting here for hours on end. So I'm going to keep it to the higher time frame, see if we can find trades. But what you want to do is, at the end of the day, you want to be looking for these levels. You want to be looking for these higher time frame demand zones, looking to take trades. And when price comes in here, look to scale in and wait for the counter trend breaks of structure. So in here, that's what you could have done. We can see on the lower time frame, most likely, that you can notice that counter trend break. So we had that reaction, failure to make a lower low, a higher high was formed. You could have reacted from that level. Stops could be moved to break even now since we broke the counter trend, and we can be looking to place another level probably right in there. You can see that level of demand on the lower time frame. So probably right there would work. Let's go 6625 right there. And we're just going to target our higher time frame level at 7,150. We're just going to make this pretty. So in this case, this will be a 1 to 10. So we'll clone this and do it again right there. So there we go. Stop loss will go below the overall low there. So let's call it 50 pips, and then 7,150. And I'm just going to try to make it pretty so we know the exact risk to reward that we'll get with it. In this case, that would be a 1 to 10.5. So let's see what we get. We come down. Oh, we might lose. Oh, not yet. Okay. There we go. Now we got taken out. So we got taken out of this and we hit break even on this one. So I'm going to keep track of all of the wins and losses. I'm going to keep track of all of the, the risk rewards and the total percent return. So in this case, I'm not going to consider taking partials as profit because it would take me a long time to calculate. So I'm just going to say 0% return on the first trade, and then we're going to go minus 1% on the second one. All right, so we're currently sitting at negative 1%. okay, because we lost on this one, but then broke even on this one. But we had to expect that because we came into this level and we had a break of structure, so that's just an easy trade. And fortunately, now we're just seeing a deeper retracement. And what we could do is if we scale back out, we could look to take this short now, because now we understand that we have pretty much broken this structure in here. We haven't really validated this demand, and we're probably going to come lower into that level. Okay, so now what we can do is look for possible hedge shorts into our current higher time frame demand. All right, so I would look to sell this probably right in here. All right, we're going to go 6630 because what this is a psychological level, and also that level of supply. We can see lower low, lower high. This is that last buying volume before the overall lower low was formed. Why is this not supply? I mean, you could take it off that level, but it's because we never cleared our overall structure until we made this move. So this is still one push. Okay. So having that understanding, we'll take that short from that level. Stops would go above that high. Let's make it 60 pips because that is, that's right above the high there. And we're going to be targeting all the way back down into this region of price. We'll go 6.5 right there. What I'm also going to be doing, because risk management or trade management is very important, I'll probably be setting take profits below the equal lows and then at our overall target. So that's where I'll look to set it. So first one will actually be 0.65. That's a psychological level. So let's just play this out and see what we can get. Pull back. And I believe we do pull back here. Yep, there we go. So that's what we would get. And we can notice now that we have come into this level, we have made a lower low in the market. Right? Lower low, lower high, we had our entry. Lower low, we take a majority of our position off the table, 6.5, because we can see those are equal lows. So that would be the region, and since it is a psychological level as well, that would be the region in which price could potentially reverse from us if it's going to. Right? Because we're still bullish, we have to understand. Higher high, higher low. This could be the end of the higher low and look for a higher high now. So we have to be taking profit and partials at regions in which price could potentially reverse from us. So I had 0.65, which was right in here, and then our overall level. And in this case, stops move to break even when we take this low. We come into 6.5, take partials, and then we got hit out break even there. So we did make a little bit of money, but I'm not going to call this a winner because, I'm not going to do the whole partials game right now. It would take too much to calculate. So let's just say 0% return there. So we're still sitting at negative 1%. In all reality, we're not, but for the sake of this video, I'm going to make it like that. So now we can delete this, and now we have broken this counter trend structure. So what we could also do is understand that because of the fact that we didn't come into this level of demand, we can still look to potentially come into it. It would just be a liquidity run for continuations. So I'm going to still keep this trade open for the time being, but also look at this as a counter trend break of structure, pull back into a level of demand, which could rest right there. Stops would have to go below this low in here. All right. And then targets could go all the way here. And for the sake of time, I'm just going to make it we'll just make it like, not going to make it perfect. All right. So let's play it out. Oh, let's stop it right there. Here's another level. That's another level of demand that we could come into. So that's another possible level. Let's play this out. Had a little bit of a reaction, came back down. We pushed. All right, so in this case, right in here, we can see that, and then in this case, we would have went right there, targets all the way up there, and then targets down here. Why would we put it right here? Because this is the low that created this high. So even though this is intra-trend demand, doesn't mean stop has to go below here. You'd have to take it below that level. We need at least a 1 to 3, and in this case, this is a 1 to 2.5. So in this case, I wouldn't have taken the trade, but let's just say you did. You would have gotten hit out break even because what do I say about trade management? When we come up to our previous high, we take partials, move stop to break even, and boom, we would have got hit out right there. So in this case, I wouldn't have taken the trade because my risk reward wouldn't have been there. But if you did, then you would have got hit out break even. Now we can look at this potential trade right in here. Stops are below that level. We also are still holding our position from this level right here. Okay, so that level down in there, stops would go below that low, which is right there. Remember our original position, let's call it 80 pips, back up to 7.150. So that's a 1 to 8.6. Let's just play it out. Now in this case, we have to just, be patient with it. And we can see right in here that we are reacting from this level. And we had a high, and then we have failed to create, I'm just going to move this over so we don't get confused here. There we go. We have failed to create a lower low, and we have made a higher high. So now I would expect this trend to continue. High, low, low. We are looking for a higher high now because of the fact that we had made a move, right? And since we were still bearish in this trend, even though we're bullish in this trend, there's nothing to play off of in here. There's really nothing. So you would have to have waited for that low to form, or the failure for the low to form, and then a higher high before you can look to get in. So now in this case, we haven't come down into this level, but just in case we do, we're going to hold that. And now what we're going to also, and what we're going to also do is place another position here, because this was that last sell to buy volume, right? That is our new demand because we've created a higher high, and now we can be looking to take another long position. Stops would go below that low right there. We'll make it 53 pips even, and then 7,150 all the way back up right in there. That would be a 1 to 10. Okay, so we're still in this position here, 1% risk, still in this position, 1% risk here, and now we're waiting for this one. If we make a higher high now, I'll probably just end up deleting that one. So let's play this one out. And in this case, I believe we push all the way back up. Oh, good. And I don't think we hit stop loss here, and that's why we have proper stop loss placement below this low. There's no need to come anywhere below this level because this was the selling volume that bought back up. So there's no reason why the institutions would push lower than where they started to sell it from, or where they finished to sell from, or where they started their buys, because it wouldn't be necessary in terms of liquidity purposes. They wouldn't need to come below where they originally bought it, because then they would be in drawdown. They're just looking to mitigate their sells, continue with their buys. So they came down lower into a lower time frame level to mitigate something, which is why it stopped and continued. So now we have made a higher high again, and this is where we just need to kind of just zoom in and out. And for the sake of time, I'm not going to go into all the time frames, but I can see here. Actually, I'll just go to the 1 hour. Let's see what we can find. Well, to this counter trend that created the low and then the high, we can see a high, a low, high, low, high, low, high, low. This is our last buying volume that created this lower low. We can see we pulled back and we had a reaction from that level that failed to generate a lower low within this counter trend sequence, right? So we know now that we're looking to push to the upside, right? We broke in structure. So that is our new level of demand. Okay, so let's just zoom out to a higher time frame and just see where that is. So what I would do in this case is place two positions, one at that level, right? This is that 4-hour supply, or that new supply zone, right? That failed to generate a lower low, so now it's demand, but I also have a lower level in here. This is our last selling volume before this big push up, which creates that last point of demand. So because we have two positions, and I'm just gonna move them over here, stops for both of them are below that low. We're going to go 7-1, which is our higher time frame level. And obviously, guys, you have to be taking partials all the way up, right? So obviously for partials, you would look to place your partial profits at regions in which price could potentially reverse from you. So in this case, we would place our partial profits right in here. That's a lower time frame level of supply. Obviously, we're looking for a higher high because we're bullish, but let's just think, if price were to go against us, it would need to come into something that would, have that catalyst to go against us, which would be a supply region. But we're not looking for that, but that's where we would place, take partials, right? So two levels there, that little tiny level of demand, and then our lower time frame level of demand. So we'll clone this and make that one right there. Stops are below this low again. Take profits are 7,150. That's our higher time frame. But we need to be taking partials throughout because we're still trading within this lower time frame swing. How do we know we're not going to get an overall pullback, right, for a high, low, high sequence? That's why we need to be taking partials, just in case we do get the higher time frame retracement, even though we still overall are bullish, and we will most likely go like that. We may not do it in one push, right? We may have deep retracements back down into demand before going long again, if that makes sense. So that's why we need to understand higher and lower time frame structure. So let's just play this one out. If we break above this high, I'm no longer going to be looking for buys down here. We'll just continue with this structure that we have. So let's play this out. And price comes back down into both regions. Now, what you would be doing is you would not be looking to, place 1% risk here and 1% risk here. You need to be treating these as one trade because it's one fluid motion. It's one particular structure. So 0.5% and 0.5%. So I'll have to split this up and do half and half. Now, if we scale into a lower time frame, and I just didn't do this in time, but what I would have done is this. We would have come into this level. Let's understand the counter trend. Low, high, low, high, low, high, low, high, failed to make a lower low, reacting off of this supply region, right? And then we've made that higher high. We have broken the counter trend. So where is another possible entry that we could place? Yeah, you could place it off of just the last selling volume. But in this case, if we pull our fib from the low to the high, it wouldn't really be in discounted price. It's just sitting around that 50%. So in this region, I wouldn't take it. I would look to take it in here because we have lower time frame imbalance. And this is the reaction that we had from this supply zone, our last buying volume, right? So we had the reaction, but failed to generate the lower low in the sequence and made a higher high. So that would turn from supply to demand. But what do I say about stop losses? I say that we have to place it below the structure. So this is the low that generated this high. Stop would have to go below that region and not below here. So let's just zoom back out and I'm going to place another one. I know it's getting jumbled up, but we get the point here, guys, right? We get the point. So that will go right there. Stop will go below the overall low. And take profit will go 7,150, 1 to 9. All right, so let's go back to the higher time frame so we can see what's going on, and let's just play the rest of it out. And I believe we do continue back to the upside. Yep, we finally do. And if I pause it right here, we could probably come back down into this level because this is the last selling volume. So that would be a really good region of demand as well to get into, but I don't think it reaches it. I think we just continue. If I'm not mistaken, because I've already looked at this. I just wanted to give you an idea of how we can go about back testing and what we actually look for on a day-to-day basis. This is exactly how we trade, guys. These are all the confluences, right? We have higher, lower time frame structure. We have objective points, understanding where price is actually going, right, before it could potentially reverse. That's how we can extrapolate the most money out of the market, is if we know where price is going institutionally and through higher time frame trend, we can pinpoint these exact regions. Maybe we're not going to get wick take profits, meaning it could easily just bust right through it and go higher, but at least we are having a strategic plan for our take profits, our stop losses, and our entries. And then it just goes down to lower time frame structure within the higher time frame structure, looking for liquidity runs, so institutionally based moves, sell to buy, right? Failure to create the lower low, higher high, so it turns into the demand. Also on a lower time frame, this selling volume, sell to buy, created that, pushed back down, and we entered into this position at around 9 in the morning, right? It was the mitigation from the demand, and that's 9 in the morning EST. That's New York session open, time and price. So we put together everything to formulate an entire strategy. So I'm going to zoom back out here and get rid of that. And let's just wait for it to come all the way back up into 7,150, which I believe it does eventually. There we go. Okay, cool. So we have come back up into 7,150, and now let's calculate the total profit that we could have made. So remember, we're currently sitting at negative 1%, and now for this one, we have made a full 1% risk here. So let's call this 6.8. And then our next position here, we have done let's just call it 10.3. And then this one we can delete because it never came into it. The next two positions, I believe, here and here were half risk. So half of 7.3. I'm just going to get my calculator out really fast. 7.3 divided by 2, because half risk is 3.65. So let's just call it 3.6. So plus 3.6. And then the other one would be down in here, 13.55. Divide that by 2 for half risk, 6.7. 6.7, and then the other one that we get can be on full risk because we only have one position. So in this case, this is 1 to 9.2. So we'll do plus 9.2 here. So if you did take all of these trades, and I know this is hindsight, guys, but in all reality, we don't need a ton of trades. We don't need a ton of pairs to look at. If we just make it as simple as this, And I know a lot of you are going to be like, oh, it's not that simple. I mean, it really is. Once you get the hang of it, once you can master your psychology, once you can do just the little things right and just understand basic structure, basic supply and demand, basic sponsorship movements, basic time and price. And if we can just make it as simple as possible, we're most likely going to have good returns on the long term, right? Even if you could lose a lot in the short term, which potentially you could, even though smart money really prevents that. It really creates high probability entries and big risk to rewards. But even so, this is a long-term game anyways. Even though this is short-term trading and we're making short-term good profits, eventually you're going to lose a couple trades. But you have good risk to reward, you follow your rules, you follow good risk management, you master your psychology, which is huge. You're going to be having long-term consistent profitability, long-term consistency, right? This is a long-term game. Invest for the long term. So let's calculate all this. So 6.8 plus 10.3 plus 3.6 plus 6.7 plus 9.2, and then our original minus 1% would be there, 35.6%. So with taking partials and everything along the way, I'm going to say this is probably anywhere between 20 and 25% return. Because obviously partials would decrease the amount of volume that's being traded and you wouldn't hit your total risk to reward. So that's why I'm going to decrease that from 35.6 to anywhere between 20 and 25% for 1, 2, 3, 4, 5. And then we had like 2 other trades. One of them hit loss, one of them hit break even. So 6 and 7 over the course of, since our first position was hit, which was actually right in here. So that was August 3rd all the way up until it hit overall take profit on December 17th. So that's what, 5 months, something like that, 6 months maybe. So 6 months worth of trading, just one pair could probably yield you 20 to 25%. If you prorate that, that's about 40 to 50% return for the entire year, just on one pair. So that's back testing using NZD USD. Now what I'm going to do is I'm just going to go to a random pair and we're going to utilize the same concepts that I teach, looking for the same exact things and go through that pair and see what we can find. So I'm just going to pick a random one. Let's just go AUD CAD. Obviously I went over these trades that we're looking to possibly take. So I'm just going to zoom out. And what I'm going to look for is just a random spot. Let me get out of that, replay. And then, we can just kind of zoom out. I don't know where we want to go. I mean, who really knows, right? Maybe like right, I don't know. Where do you guys think I should go? If we just zoom out here, we're on the 4-hour time frame. Where do you guys want me to go? Let's just go like, that's fine. Right there, maybe? I have no idea. Something like that. So let's think. I think we've already done that. Actually, yes, we have. We've already done this before. I remember this because this is a bad spot to do it because I've already taken trades in here. This is that distribution I talked about. And no, because I'm not going to do that because I already know what happens. So we're going to exit back out of here. We're going to zoom back out. Let's see. All right. Where do we want to go? I want to make it a little bit tricky, right? I don't want to just go in the overall direction, but I want to make it a little bit like where I don't know what's going to happen. Because I remember trading in here. I remember we broke the structure. I remember coming down, and I remember trading all in here because it was just simple patterns. I don't want to go too close to the beginning because I already know what's going to happen. So I'm just going to pick a random spot. We're just going to go replay, and we're going to go right here, okay? Wherever that is. Okay, so we're kind of in the middle between bearish and bullish, right? So that's going to make it a little tricky for me to do analysis. So I'm going to try to do that. I just didn't want to do it too close to price because I already know what happens. So now what do? Let's just kind of zoom out and do some analysis. So in here, higher time frame, we can see clearly that we're still bearish. However, we had that massive sell to buy. So in my current instinct, what would I look for if we were trading just in this region of price? I would look for shorts because what do? We came back up into a level of supply here. We've swept all this liquidity and we're probably looking to break structure potentially. However, we're still bullish. This is a clear sell to buy. So what we could be looking for is pushes down into an overall level of demand, which is right there. Why is this demand? Because this is a huge sell to buy, reprice, continue. All right, so I'm just going to zoom out of here, do some more analysis. Let's go to the still on the weekly time frame. Okay, so on the weekly, and this is just zooming out here, we have swept a lot of liquidity, made that higher high, pulled back, had another large reaction. And where did we stop here? Where did this huge sell to buy occur? Well, if I zoom out, I can clearly see this is a level of demand right there. Clear level of demand. Sell to buy, reprice, continue. So this is going all the way back to 2009. And look what else we have. Equal lows I'm just seeing. Okay, so let's extend this all the way over and boom, we come into that level. So now we're looking at price to come down into that level of demand. So that will be our higher time frame region, but maybe there's some lower time frame take profits that we'll have throughout the way. So that's what I would mark up. What I would also see is that we swept buy-side liquidity here, 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 and we stopped within this imbalance. We stopped, that's cool, look at that. If I pull that all the way up and go to price 1, we just missed it. But that's a psychological level within a level of supply. So that looks interesting. And now we can see on the lower time frames that we created a high, we've created a low. High, a low. We've come into this level of demand, had a reaction, failed to create a higher high, and a lower low formed. And now we're looking at possibly making another low there. So that would be another level of interest that price could come back up into. We already mitigated that, so that's a level of supply that we could push into. So that may be interesting, around 9,440. So we'll keep an eye on that one. So clearly, lower time frame, we're bearish. And since we've kind of made a reaction from 1.00, I would probably expect further downside. So let's just see what we can find. I'm going to keep that at 1, make it perfect. All right, 4-hour time frame. Where is the current trend? Well, the current trend is down. So, I like this. I like this. I like this buy to sell. We've made the lower low. We're still continuing to push lower. The price is definitely bearish. Okay, cool. So where is our higher time frame supply zones? Right there, we could push higher up into that for a little bit of a pullback, but that would require us to take out this high. So what I'm going to be thinking here is that we're going to be continuing with the lower time frame structure. So just basic structure, ladies and gentlemen, lower low, lower high, lower low. We can see clearly we had a nice buy to sell, and that swept pretty much everything. Didn't sweep that buy side liquidity, but you can just see the point. Equal highs there, all of that liquidity was run. Equal highs there, clear buy to sell, lower low. We need to be looking for pullbacks to continue, right? We need to be trading with the trend until it breaks. So let's zoom in here and see what we can find. All right, so what I do like about this, just from off the bat, let's look at the counter trend. Remember, that's part of the rules. If you watch my episode, I think it was about 3 weeks ago, it was, we titled it, So Simple You'll Cry, because in all reality, you really will. If smart money can be so simple if you just know what to look for. So go watch that video. It teaches you step-by-step approach and how we can kind of approach the markets. So kind of going back to that video and going back to NZD USD, that example we showed you a little while ago, we can understand that when we're looking for supply and demand flips, right? Let's look at the basic counter trend structure. High, low, high, low, high, low, failed to generate a higher high, lower low. So this right in here is just that overall supply, right? It's just this buying volume that failed to make that higher high and we rolled over. So now that becomes our level of supply there. Huge buy to sell, right? This is our overall buy to sell level, but to kind of make this a little more precise, I'm probably going to go right there just because this is a big move and we wouldn't want a stop loss looking like that. We really wouldn't. And the risk to reward wouldn't be there. I'd probably have to go in this case below that low, so maybe 9.2, and that really wouldn't be a good risk to reward. So let's take it like this, and we can set let's do that. We're going to take it right there. I'm not going to make this too precise. I just don't want to waste time trying to get the perfect price entry, but that will be sort of what we look for, 82, 84 pips. That's our level of supply. And also I can see here that within this counter trend, we did the same thing. High, a low. This is demand. Boom, demand, a high, a low. We've reacted off of it, but failed to make a higher high, and we rolled over, made that lower low. So that becomes definitely our supply. It's that lower and higher time frame confluence. So I'm going to get rid of this line here, and we'll drag this all the way down. What we can do, for the sake of time, because I think where current price is right now, because I have my markings here, that we haven't, or I think we have come into that level, but I don't want to keep doing analysis for, what is this, 2021, for an entire year. It would just take too long. So where I would look to actually target here would, since we are finally taking out a prior swing point, I would be very careful, because when we take out a swing point, what do we naturally expect to happen? Most likely, not an instantaneous reaction and pullback, but we have that possibility. Since we've made a lower low, we could look to pull back before continuing short. Right, that's a possibility. So I'm not going to be targeting huge targets. It's maybe 9.1, 9.0. Let's just go 9.1 for the sake of it, just to give us a decent risk to reward here. 1 to 2.8 really doesn't meet my rules. I can see that this is a level of demand, but in all reality, guys, my higher time frame level would be that higher time frame weekly repricing event. That lower low, lower high, failed to make the lower low higher high. So in here. So 8.7, but I'm not going to do that for the sake of this video. We'll just see how we go here. So let's just make it 0.9. That's a psych level that we know we're going to come into later. So in this case, that would meet my rules there. Probably around a 1 to 4. I'll just make this look really pretty. About a 1 to 4, 1 to 3.99. Okay, cool. Now let's zoom in here and let's play this out. Okay. So now that we're looking here, that would be that counter trend that we need to break. So if we break the counter trend, okay, now this one can be the counter trend. We made a lower low again. We made another lower low. So we really need to come back above that level. Okay, so now we have done that. So we have come above that level. If we get retracements, we can possibly look to buy it up into here if it doesn't come up into there first. So that would be a possible level. So before I do that, let's kind of mark that off. That's a level of demand. So just in case we do come back down into that region. Oh, there we go. Okay, cool. So I'll just place my risk to reward tool. Let's just see what it would look like. And it's probably not going to be clear enough because you have to put it down here. And that's just not a good enough risk to reward. So in this case, I wouldn't have taken this trade. But let's just see how it plays out. Let's see if we do. We may come down lower. We haven't fully come up into that level yet. But that would be something that we look for. We'll just extend this out. Alrighty. So now right in here, we've made a lower low. So that wouldn't have been good anyways. So you know what? I'll make that a negative 1%. Let's just call it negative 1. You know, we've looked to take that trade. That's a possibility as well. Oh, I forgot to do that. This is what I would look for. So since we've made a low, we've made a high, this is our last supply zone, our last failure to create the higher high, lower low, and that's where we made that lower low again. This is where we would look to potentially trade again right in here. And since I didn't see that in time for me to stop it, I'm not going to count this as a win just because I didn't stop it in time, because I really don't know what's going on in here. So we'll just call that no trade. You would have taken partials and moved stop to break even, but since I didn't see it in time, I'll just scratch it. All right, let's keep going. So we're still making lower lows, lower highs. But we finally made that lower low, so we could see an overall retracement. So now we're looking at breaking structure. So we've broken that structure back to the upside. So let's scale out. Let's see what we can potentially find. This is a level of demand that we could look for. We're above the 4-hour 50 EMA. Let's just extend this all the way over. Continue to play that out. Maybe we come back. Nope. And we go very strongly. Oh, okay, great. We have the reaction. So we never pull back into our buy level. That's okay. We just look for a higher time frame. So now this will act as our buy side liquidity. We swept all this liquidity here. What is this as well? Shoulder, head, shoulder. Inverse head and shoulders. people are buying above the break of the neckline, and it's probably going to continue short. I would hope so, because that would be a confluence to sweep retail trader stop losses. So we're in this position here. Stops are above this high, and we are looking for potentially 94450 if we get a deeper retracement. But let's just see. Okay, so let's go back down to the one hour time frame. So we've had the reaction, but there's no counter trend to play off of. So there's really no confirmation. You really can't just go like that and fill up the imbalance and go short, because there's nothing to play off of. This could easily just be a high, a low, a higher high, come deeper into this level and then break. So we have to be patient with it. We want to see a failure to create a higher high, then a lower low first, for then a pullback to continue. So let's just see if we get something like that. Let's delete this. See, that's exactly what happened. We came back up. That's why we have to be patient with this. There's no counter trend to play off of. So let's just keep going. Okay, there we go. So we've done it again. This is the high, a low, a high, a low. Let's see if it comes down lower. Alrighty. All right. A high, whoops, high, low, another high so far. Stops are still above the overall swing point, because this is just the intra-trend, intra-supply. So we're in a little drawdown right now. See what happens here. Okay, we come up again. Oh, okay, now we break structure. So now we have broken structure. This is really good now. We've created that high, and now the new low. This is the low that created this high. So I'm going to take a gander here and say that we're going to come back up into, where's our last area of supply? Let's call it 9,350. That's that psych level. Okay, cool. Let's make this precise. So now that we have distributed, right? We're distributing in price here. So we have created that lower low, we have broken that structure. So now we can expect a pullback to short. That's what I would expect. So where do we look? The counter trend. High, low, demand right in there. That candle reacted, failed to make a higher high, lower low. So that last buy to sell in there, those candles will complete that supply. It will make it a supply zone. So I'm going to add another short position. Let's just go from there. All right, and we're targeting, what do we say, 9-0 higher time frame. Obviously, we're going to be taking partials throughout, but we're just going to go there. 1 to 13. That's not a bad risk to reward at all. All right, so let's see what happens if we can get back up into that level. Okay, so now, what are we noticing? Just because we didn't push up into it originally and we made a lower low doesn't mean that we're going to just continue short. I mean, we could go lower time frame, but this would create that lower time frame buy side liquidity for us to then run, have an overall pullback like this, and then continue short. So oftentimes what you'll hear me say is this is really great because we're creating buy side liquidity so we can do a buy to sell potentially. It would free up the liquidity, take retail stops, mitigate this level, and then go short, which would create another opportunity for a pullback to short again. Because as we know, guys, this could just be a lower time frame trend here, and this would just be an overall pullback. It's not a break of structure. Even though it's a break of structure lower time frame, we wouldn't expect this because we're higher time frame bearish now. This is just a deeper retracement for a lower low. Okay, so oops, go back there. Let's just play this out, see what happens. Yeah, so that's what we're doing now. So, okay, well, this is where we just have to be patient, or this is an area where we could be looking to place additional positions just in case it does, just continue with lower time frame structure. So I'm going to place another one here. I'm going to make it 911. There we go. So I'm going to make it 931 because that's a psych level. So filling up in balance, coming up into this lower time frame level of supply. So in this case, you place it here. And what you could do, since you have this position, you can place your stop above this high. You should really place it above this one. But since you have another one that you've placed, it's better to place it above here because now if it comes back above this and takes you out, you're going to get into this position. Right? So that's why it's okay in that case. All right, so let's just make this 9-2. Oh, wait, this should be 931, and this overall take profit should be 9-0. Stop loss is right above the high, 30. Let's call it 36 pips. That's a 1 to 8. So let's just see what happens there. And we can see here. Look at this. I'm noticing equal highs. So that's really good buy side liquidity for us to take. So when you have equal highs, even though this is a little bit of a pullback, you wouldn't look to take it off of this supply because we have equal highs. We're most likely going to run it first. All right, so let's keep playing it. All right. All right, cool. Oh, stop it. So we've come into the first position. Where would we be looking to take partials, move stops, break even when we take out this low? Okay, that's what we're going to be looking to see. Okay, price has done that. All right, so that's lower time frame. All right, we're about to come into that level. All right, stops to break even. Partials have been taken. We have hit this overall low. So what could we expect? A pullback. Now, what you could do is just move your stop below that previous high, right? Just to mitigate some risk. Maybe not back to break even, but at least right above that swing point, right? So I'm gonna keep that for this so we can see risk to reward. And let's just see what happens. So now I don't really see anything in here. This has already been mitigated, but it really wasn't anything of interest to me. We're continuing to make that lower low. So let's just play this out. This is really just one expansion. So what I would need to see in this case, since there's nothing in here to really play off of, I would want to see some form of like buy to sell and break counter trends. We're starting to see descending liquidity. If we come into anything, great, whatever. We'll check it out once price actually falls again. Then we break the counter trend, then we can pull back to get in. But since there's really nothing to take advantage of in here, then I'm not really looking to place any trades in that case. So we're just going to be patient and wait to see what happens. So now we are creating around equal highs. We could be running that soon. Alrighty. Okay, so now let's just see what's going on in here. So I really don't see much in here, guys. I really don't. I mean, we have equal highs. This is just almost looks like accumulation to me. And I really wouldn't take anything. I mean, you could look to take it off of this, but it's really not looking that pretty. Just even though we are in a downtrend, we are accumulating. So I want to see what happens here. We have relatively equal highs. So I want to see if we maybe go like that, have a deeper retracement. So for me personally, I'm not going to be looking to take this short yet. And that's a good thing. Okay, so let me get rid of all this stuff. Let's just see what we have. Okay, let's keep going. Okay, so now this looks quite interesting now. So we've come up into this level of imbalance. We have swept a lot of liquidity here. If we make a lower low, you know, this could turn into supply for us because we can see a high, a low, demand, failure to make a high, imbalance fill off the liquidity run that we had in here, failed to make a higher high, lower low. So that could turn into supply. So let's just kind of see what happens as we go. Okay, so we come higher. Reaction. Okay, so now we're starting to push higher now. So we don't want to be, and it's exactly why patience really comes into play here. Remember, I said we're not selling from this region because we want to see liquidity run and a reaction and break of structure first. We haven't seen that, right? We would need to have seen a break below this level or the failure to make a higher high and then the break below this level, which we didn't do. We actually respected the lower time frame here. So if you would have bought that would have been great. But for this video, I didn't look to buy, so we'll just be patient here. Let's zoom back out. So now that we have accumulated, we can see a clear accumulation schematic. Boom, 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 boom. We can be looking to take a trade off of here. That's our last selling volume, and then maybe right in there. That's another area of demand. So let's just mark that off. We come into it, and in this case, we don't. So now, right in here, we have, we've taken a lot of our profit off the table, especially because, well, what happened? We come into that level of the low. Look, we just zoom out, lower low, lower high. We've come into that level. More partials are taken. What do I keep saying? Especially if you watch that trading nut video where I talked about scaling in and trade management. There are partials regions taken at every significant point because you could sweep the liquidity and then pull back and potentially form another lower low. So that's just something that we have to be wary about and understand. So in that case, I'm going to keep those levels. Actually, for now, since we have pulled back, I'm looking to only sell from here because we wouldn't want to be buying anymore because we're still bearish. So let's just see what happens. We still have that secondary level that we haven't come into. So now these buys are now off the table. The accumulation, we never got to pull back enough. And we finally come into premium price. So I wouldn't be looking to, okay, let's see what happens. I wouldn't be looking to buy. All right, so we come into that level. All right, now we start to fall. Alrighty, so let me just take a look, because I'm just doing this as I see it, guys. I have no idea what's going to happen, just based upon smart money concepts. All right, so we have come back up. We've hit break even. We've taken a majority of our position off the table. Okay, we have failed to come up into that level. We're starting to make a move to the downside now. So in all reality, I'm probably not going to be placing this anymore. If we come back up, we could be just now creating a higher high and higher low sequence. So in this case, I'm probably going to be deleting it, but for the sake of this video, I'm going to keep it there just in case it comes back up, but I'm not going to count it as part of our profit. I'm going to say we're not taking that trade. So what I would actually be looking to do is look at this level. That's a level of supply. So now we have made a full pullback, right? This is not a break of structure. It's a break of structure lower time frame, but it's merely just a pullback. Pullback for continuations. So now we have had that pullback. Now where's the counter trend? High, low, high, low, high, low, high, low. Failure to make the higher high, lower low. This is our last buying volume. A lot of imbalance in here. That turns into supply. So now that provides another region of price for me. So let's see what we get. So let's go there. Stops are above the overall high. And then what do we say? 0.9. All right, cool. That's a 1 to 5. Meets my rules. Let's go with it. So we continue to fall. We've made that lower low now. So let's see if we get an overall pullback back to the upside. What we could also do is take advantage of the counter trend that I'm noticing here. Okay. All right, so this looks kind of pretty now. We have supply here. We have supply here. This looks interesting to me. Boom. Where's our other level of supply? Now we have one here. And we have one here. Okay, cool. So now I'm looking to place my trades because just in case we continue with this lower time frame structure, we want to be able to take advantage of continuations, right? We're following structure very, very nicely here. So we'll be looking to take both of these positions. Let's just see what happens there. So half risk on both of them, right? And in this case, since we have two, we can place that stop loss there and that stop loss there to get better risk to rewards. So right there, 1 to 5.7, and this one, 1 to 4.35. Okay, cool. Let's play this out. Ooh, look at that. Okay, cool. Awesome. So we have the original reaction. We'll see if we come back up into our second one. However, now we have to scale in and look at the counter trend here. What I'm noticing, high, low, kind of pull back, last point of demand, high, lower low. We have formed that lower low. We have closed below that level. Okay, so what I'm noticing here is imbalance. So I'm not going to scale in because if I scale in, I am afraid that it will say no data available, because if I scale in too far into back testing, it doesn't allow you to do that. And that way I would kind of ruin the back test because it would bring me back to the start and I would see exactly what happened. And I don't want to do that. So I'm just going to, and this is why time frame doesn't really matter, because the concepts are here regardless. So I'm just going to take a guess at that's a level of supply and imbalance. Let's make this a round figure, 3.5. I like to trade off of whole round figures. So we're going to short from that level. And I'm going to place it right here. Stops would go above that swing point. We'll make it 29 pips. Back down to overall supply right in here. Okay, cool. So let's see what we get. Entry. It might hit us out. Back up. Oh, okay. Continuing short there. All right, nice. Awesome. So these positions, so now since we've hit the objective, we can get rid of this one. This is no longer there. So in this case, we have hit 0.5% on that one because we risked 0.5%, didn't come up into our secondary level, but we had this, so that was a good enough trade, right? It worked out. 5.74 divided by 2, so that's 2.87. So plus 2.87, and then this one right here would have been taken on full risk 1% because it's a separate trade, 4.27, so I'll just call it 4.2, plus 4.2. Okay, let's see what else. We got hit out break even there. We didn't, so bad, we didn't come up into that level. We still have that level we could come up into. Now let's just kind of play this out here. So we've already come up down into objective, so it's a little bit difficult. You know why? Just because when we come into objective, we could see reversals, and that's probably what we're going to be seeing. And I don't really see anything in here to take trades from. Yeah, so we might be seeing some reversals now. So in this case, I don't really see anything else. Price could come back up into this region, but I mean, for the sake of this video, we're just going to call it quits because we're already way over time here. So 9-0, we hit the overall objective, and now you would look to take it off the trade, that position right there, and continue short. So I believe that is all I wanted to talk about, guys. So let's calculate the total percent return. This would have been an awesome trade to take from right in here. Or excuse me, right up here if we had gotten it. But we did make do with what we had here. So that's 4%. I forgot to add that. Plus 4%. And then I think we had another position on some other time frame because I have -1 drawn. So we must have taken something else I forgot about. But anyways, -1 plus 4. Oh, we didn't quite get hit in there. That would have been awesome. 1 to 13. Got in here, took partials here, took partials there because of the lower time frame break. I'm not going to calculate the partials, so I'm just going to call it plus 0% because that came up, hit break even. But then we had that. Obviously didn't come up into there yet. Lower time frame trades. I didn't see this in time. I didn't see it in time. That would have been a great opportunity. I'm not going to count it as part of the profit because I just didn't see it. We had the lower low. That was our supply zone. That would have been a great entry. Counter trend. This is just perfect, guys. High, low, high, low, high, low. Failed to make a higher high, lower low. Whoops. Got rid of there we go. Failed to make a higher high, lower low. Pull back. Stops above the high. Not above here. Even though it would have survived. Still above here because this is the high that created this low. It's the same thing what we teach, right? So again, deep pullback. We had the reaction. Pushed up. Pulled back down, right? So it would have made more money. There we go. Counter trend, high, low, high, low, high, low, failed to make a higher high, lower low, pulled back, didn't mitigate, so we can classify these two as valid trades. So that's why we had 2 of them, each at half risk, and we only had 1 that hit at half risk. That's why it's okay to have multiple positions. I should have placed a trade here. I didn't see it in time. I guess I was too busy talking about, looking at this structure here. But if I had have seen this live, I probably would have taken it just because obviously this would have taken days and days and days. So I would have had time to see this, but for the matter of backtesting, I'm not going to count it as a win. So anyways, we had half of that and we had a full 1% risk on that. So 4.27%. So I have -1 plus 2.87 plus 4.2 plus 4 for a grand total of, let me just calculate this, plus 2.87. So a total of 10.07. So 10% return. So with partials being taken throughout, let's just say it's probably going to be about 60 to 70% of that. So let's just call it 6%. 6% return on all of that. And if I had have seen that in time to place it, that would have been even more. So missed out on a couple trades, but regardless, I'm just going through backtesting, going through my rules, going through trend, understanding that this is the higher time frame expansion. So this is this lower time frame trend. So this is not a break of structure. This is just an overall pullback. And then we distributed within this region of price and we broke structure. We wanted to pull back, didn't quite get that entry, but we're able to take advantage of the lower time frame supply that was in here, had that beautiful wick entry, swept equal highs there, took partials, moved south to break even, great, came all the way back down. Once we accumulated, you probably could have taken something in there, but it's just a little risky just because we still are bearish. So that's why I didn't do it. But you would have won if you had have taken it. All the way back up, hit stop at break even, great, whatever. Didn't quite hit our entry, unfortunate. Came right back down. Oh, that would have been another one, but this is all hindsight. That buy to sell, broke structure, that's hindsight, so I won't count it. Consolidation, creates the lower low, that turns into supply. And we didn't quite come back up into it the second time. Lower low again, pull back, create more supply, lower low, just take it off the supply. Big buy to sell, reprice, continue, break the structure. This is originally demand, now it flips to supply. It would have been another entry. Just didn't see that because I was talking while this was going, unfortunately. But I was able to catch on these two. It's just the same concepts, guys. And if you see this, it's just repetition. It's consistency. It's having a trading plan, a professional trading plan. It's having good rules. It's having good risk management. It's having good psychology. It's understanding the basic components. And I'm just looking at the 1 hour and 4 hour. I guarantee you if I actually was looking at this live, even from all the way back in here, every single day with time and price, with lower time frame reactions, even scaling in, I probably would have had a lot more trades. But just for the sake of backtesting, that's what I would have had. So about 6% return on the trade that I did catch, but still, overall net profit on 6% return for just this one pair. And this is just one pair. And let's just see, for a time's sake, right? We had our first trade. That was September 2nd. And, we stopped it right here at December 15th. So November, December, 3.5 months. 3.5 months, 6% return. So 12 divided by 3.5 because it's 12 months in a year. So prorated, we multiply that by 3.4, multiply 6% by 3.4, and prorated, we would have made 20.5% in one whole year just trading AUD CAD. Just like we made anywhere between 20 and 25% on the NZD USD example in an entire year. So just in those two pairs, maybe about 40% return. And guys, you don't even need that amount of return. That's just why if you use good risk management, the long-term game always wins. Okay? So I just went over just a random pair, random time frames. Hopefully you guys learned something in how I go about backtesting and really how I go about trading every single solitary day, guys. And if this is something that you are pretty fluent in, I recommend going for prop firm challenges. Prop firms are awesome for getting you funded and showcasing your skills and trading with a large amount of capital. However, I will tell you, if you're not profitable, don't go for a challenge yet. Be disciplined, delay your gratification, and get the education that you need first. Because if you're not profitable now, what makes you think you're going to be profitable on a funded account? Even if you do get funded somehow, you're not going to see that consistency because you're not profitable. Now, I'm just trying to be real with you all, right? So, if you are looking for consistency, if you want to learn exactly how I do this, step-by-step approach, in my mentorship program, I do have a few spots available for the winter time. So, if you are interested, book a free call on our website, www.ArielFxTrading.com. We would love to sit down with you, learn more about your goals, how we can best help you, put together an actionable plan for you. And if you're interested, great. We would love to have you jump on board with us, and we will teach you exactly how we go about analyzing these markets on a day-to-day basis. Not only will you receive all of our education, because we don't hold anything back in our courses, but you will also be a part of our VIP group, which you will be receiving day-to-day analysis and trade ideas so that you can obviously earn as you learn, because that is a really good feeling when you're earning money and also learning at the same time to help you become very self-sufficient and not dependent. And that's our ultimate goal. So we'd love to speak with you on a call. Feel free to book a call on our website, ArielFxTrading.com. If it's the right fit, we would love to have you on board. And if not, no worries. We'll provide you with our trading plan. We'll give you our free beginner's course, and we'll give you some advice on what you can do going forward. We just want to make sure that we're the right fit for you so that you can take the best investment in your education, utilize a mentor that really wants to help you and really wants to see you grow, and then go from there and build upon these skills over time to help you become a fully funded six-figure trader and doing this full time. So guys, I hope you enjoyed this video. Give it a like, thumbs up, comment, subscribe, whatever you need to do to show some love. I would really appreciate it. And giving me your honest feedback. What do you think of this video? Did you like it? Would you want to see more videos like this going forward? Just let me know in the comments. I'm always open to constructive criticism as well. So have a good rest of your day, and we'll talk to y'all later. Take care.
Hey folks, you ever wonder what broker I use? Well, I use Henko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Henko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at henkotrade.com or just click the link I've put in the description.